How's it going, everyone? My name is Jake with Trade Confident, and boy, do we have a lot to talk about today. I'm going to be talking about a major bill that was just signed by Joe Biden just within the past few days. There's a lot of political discourse, so we're going to be trying to talk about the facts. I'm not going to be talking about political views on it, but I do want to hear your guys' thoughts in the comments after I read out the article. To clarify, I won't be speaking and reading directly off of an article due to the large amount of political inflammatory writing. I'm just going to be listing off facts that I read from multiple different articles that seem to line up. And I'll want to hear your opinions based off that. After that, I'm going to be talking about the giant red candles across the board and talk about what that might mean for the future of crypto. I also noticed a pretty big pattern on Bitcoin. We are in our third massive drop. We just broke out of our, again, third bear flag, so we're going to have to see where that goes next. Let's talk about the news. Again, I'm not going to be reading from an article because pretty much every single one was politically inflammatory one way or the other. I tried to get all the information I could from very neutral, central-leaning news sources. That way, we're not really, we're not here to talk about politics, guys. I just want to give you the facts and everything you need to know about what's going on. So let's jump into it. I'm going to be reading from my notes real quick. Here we go. Over the past few days, President Joe Biden signed the Inflation Reduction Act. Part of this bill was to introduce $80 billion of new budget over the next 10 years for the IRS. There's a ton of opposing views on what this might mean, but I'm going to try and tell you the facts about what we can tell from right now. The most common number that we're seeing thrown around is they're going to be hiring 87,000 new employees. This is where a lot of the political discourse comes into play. No one really knows exactly what these employees are for. There's a lot of views saying that they're going to be creating an army to come after us common Americans, throwing audits at us. The most common one is that they're going to be going after people who are over $400,000 per year in income. Overall, though, the main thing I can find is that the IRS is expected to lose about 50,000 employees over the next 50 years just because people are retiring. The IRS has a lot of boomers in their employment. This is just normal. We're going to see a lot of this turnover happen in pretty much every job sector. So that's mainly the problem. They're just going to be replacing retiring employees over the next few years. On top of this, they seem to plan to hire IT and customer service professionals. This will allow us to actually be able to talk to and get access to the IRS if we have questions. So overall, I do think that's a very good thing. As I said earlier, there are expected to be more audits for individuals earning over $400,000 a year. There is a lot of concern that they're going to be coming after common people like small businesses, individuals, and all that. But for the most part, it does seem like they're going to be going after, again, $400,000 per year individuals or higher. I do want to hear your opinions down in the comments. What do you think this act is for? Where do you think this $80 billion is going over the next 10 years? What are these 87,000 employees for? And what do you think this is going to mean for crypto as a whole? I don't see a huge impact on crypto. If anything, they'll just bring more regulation. And as you've heard me say, all this is going to do is bring a lot more trust and mass adoption of the crypto space. So long term, this could actually be a good thing. All right, news out of the way. Let's talk about those big red candles. Right now, I am on the Trade Confident website right here looking at BTC USD top and bottom finder. This was last updated August 19th, which was this morning. Right here, we see that big red candle. In this case, it's clear, but on a normal chart, it's going to be red. We are very quickly approaching the green support level right here. We have also fallen below the midline, which indicates we could be entering a downtrend. On top of this, the market reversal chart right here is throwing a big gray bar. We haven't quite seen it reach green. This means that we may not be done quite yet with this big candle or this downtrend overall. We will be keeping everyone updated on this. Checking out the charts right here. As you can see right here, this is where we're at. This is the big red candle we're looking at. Let me zoom in a little bit right here. I'm also going to switch to the regular charts here. And I will explain why you might use log versus linear charts in just a minute. Right now, this is going to show direct price movement. We have broken out of this ascending wedge pattern. This is actually technically a bear flag. And of course, it's breaking out in the direction as expected from a bear flag. As long as this candle closes outside of this right here, as long as it closes under this ascending support, then we are officially have broken out. Right now, I'm going to switch to the log chart. Let me explain just really quickly why you might want to use the log chart over a linear chart. Linear charts become useful when you want to see pure price changes within scaling calculations. Day traders often prefer linear charts. Logarithmic charts are useful when viewing long-term charts, which is what I'm about to do. This is why I'm changing to logs. Over the long term, large price changes are made, which linear charts can distort. Log charts are also important in the context of exponential growth. Very simply put, linear charts are going to pay attention to the movement of price, whereas the logarithmic charts are going to pay attention to the structure of percentage movements. So a linear chart from $1 to $2 versus $100 to $200 will look very differently. You'll see a much larger jump in $100 to $200 than you would at $1 to $2. However, on a logarithmic chart, that candle would actually look exactly the same because it's paying attention to percentage. A change from $1 to $2 versus $100 to $200, despite the dollar difference, is the same percentage-wise. This is very helpful when looking at long-term price charts, as any percentage movement shows the same amount. Now that you know the reasoning, I'm on the logarithmic chart. Let's take a look at this little pattern right here. As you can see, I wouldn't consider this really a bear flag, but we did have an ascending triangle here. This is a linear resistance on top of a ascending support level. That is a ascending triangle pattern. This very quickly broke out to the downside. Ascending triangles tend to be, or triangles in general tend to be continuation patterns, so that was to be expected. Right here, we got a big bear flag. The downtrend really started at this candle, moved down, and went into this basically channel pattern. And then once it broke down again, big bear flag that moved into this rising wedge. Again, this is basically just a bear pennant. It's the same thing. It's just a rising wedge after a big bear flagpole. And we have broken down to the downside. So the main price prediction that you can do this with, starting at the top of the flagpole, which is the breakout here, going to the bottom of the body, you're then going to make this a linear move, bring it over to the exact breakout, and this line right here is your estimate. This brings us to about $15,580 for the bottom possibility of this bear flag. I'm not making this an official prediction, but this tends to be where bear flags end up. A couple of videos ago, my last Bitcoin video, I did say I don't think the bottom is in. We haven't officially gotten lower than we have originally, but if we do meet this $15,500 point, that will be a lower low, and we may be seeing continued moves down. I do think this is the absolute worst case scenario, though. If we do bottom out, I think that's where we would go. More than likely, though, we're going to see a support structure, really strong support, actually, right here at about 19,000. So we may just barely break out of the $20,000 price. If we do, though, it wouldn't be surprising to see $15,000 shortly after that. I'm going to zoom in a little bit here just to focus on the main trading pattern right here. I'm going to delete this line, and I'm going to switch on the TC top and bottom finder again. Right now, the top and bottom finder settings are just at 10. I'm on the daily time frame, although I'm about to switch to the 4-hour to get a little bit of a better picture. I'm going to take the logarithmic charts off. You can see the chart did change a little bit. Let's head over to the 4-hour time frame. Boom. Right now, let's zoom in. This green candle is barely there. To be honest, it's barely there. We could see continued moves down, although it does seem like we have lost some momentum. We are getting now 4 green bars from the TC market reversal chart. If we do see a buy signal, this could be a good place to enter. We have not seen that quite yet, but we could see that within the next couple of days. That just about wraps it up for today. Let me know down in the comments. First, I want to know your opinion on the Inflation Reduction Act that was just signed. And next, I want to hear where you think the price of Bitcoin is going next. Do you think 20,000 or 15,000 is more realistic based on the support structure or the bottom of the bear flag pattern? Let me know down in the comments below. I'd love to hear your thoughts. If you'd like to start trading with us, what you're going to want to do is head over to tradeconfident.io/trading tutorial video. Links will be in description. Just click that over there and it'll bring you straight to this page. You're going to scroll down and check out our scalping record. We are currently 12 for 12 trades right here. There is an open trade right now. Members are only able to see that at the moment on the inside tips page. It was called out on Telegram and sends you to the inside tips page where you will actually see the call out itself. We've been trading with this strategy for 93 days now, and in that time, we have beat the S&P 500 by 440%. If you want to trade with us, you're going to want to grab your membership in step 2 and then join the Telegram channel. This is where you're going to be getting all of the channel alerts. If you want to check out the indicators that you saw today, you're going to click over to indicators. Links are also in the description there. You can grab the TC top and bottom finder and TC market reversal right here at this link. If you have the bundle pack or you purchase a bundle pack now, you will get a $400 off coupon for this indicator. This is a fantastic deal, guys. It doesn't get much better than this. All indicators are lifetime access and one-time payment. You will get the source code for the bundle pack indicators. It is a little bit different for the TC top and bottom finder. You won't get the source code for that. We actually give you access through TradingView itself. So once you purchase, send us an email with your TradingView username at betradeconfident@gmail.com. Thanks so much for watching. Trade safe, trade confident, and I'll see you in the next video.